Hello, this is Rich Posson, CMT. It's January 28, 2018. It's been several months, if not a few years, since I've talked about real estate from a business cycle perspective, and that is the long-term to super long-term cyclical trends. This chart is of the REIT index, so it's looking at REITs, but I use it as a guideline for real estate in general for the U.S. And you may have seen this chart in the past because I've updated at least a few years ago, and I really haven't changed anything since then. And I want to talk today about a possible top coming for real estate, or at least for REITs. But first, let's look at some history. We had a drop into a 9-year cycle. Some of you may call that a juggler cycle. And we can see this index dropped 66.5%. We then had a lengthy bull market, but there was an interruption of a very short-term 9-year cycle. Looks like it barely worked, and it's okay if you say it did not work. I did some math, and it shows that it basically declined about 16%. But again, very brief, just a hesitation. Then we get more sizable decline into a 9-year cycle, a 52.3% down for that index. Now, we then see we have another 9-year cycle coming in with about a 36% decline. Another one comes in to 71% decline. Now, let's back up and discuss these 9-year cycles quickly. There's an 18-year cycle where two cycles combine, and every other one's a little more important. I don't like to use that cycle in my overall model for all the markets like stock market, commodities, economy, but it's there, and I think it's there more prevalent, let's say, or dominant in real estate. And then we can see another 9-year cycle, and then a more important. Again, every other 9-year cycle more important. Now, this bear market coincided with the financial crisis, the Great Recession, but it was also for 36 and 72-year cycle bottoms dating back to the 1930s 216-year cycle bottom, the Depression. Okay, so now we have this bull market. It's been working fairly well. I've been trying to time some of the 3-year cycles, which are the smallest or minor long-term cycle that I follow, and you may refer to as the kitchen. There's also a presidential cycle in the stock market that's a little bit longer than I think than kitchen and the 3-year, but some people lump them all together. At any rate, we can see that this market is now due for a 3-year cycle top in 2017 or 2018. We haven't seen any data yet for 2018. So I'm looking for a 3-year cycle top. Ideally, it will bounce back up towards the 2016 high. So for as strong as the stock market is right now, and for as strong as the economy is right now, chances are this is going to try to attack that high at 216.04 for this index. But what I want to warn is by no later in 2021, we should see a recession, and it should impact the stock market more than anything, but could very well impact real estate and therefore impact this index. So something to consider here moving forward, that we're setting up for a bear market in real estate right at the moment. The best evidence saying it's still a bull market, and the economy can hang in there all the way to 2020, but the point is the window is narrowing. We're seeing statistics suggesting the economy and real estate and stock market can peak out any day now. I'm Rich Posson. Thank you.